morning, everybody, and thank you for the opportunity to talk about flood re this morning. As Daniela says, it's a slightly different scheme. It's a very specific response to a very specific problem. So I want to spend the next few minutes talking about what the problem was, what we did, and the results that we've seen. Excuse me. It is a very new scheme. We have not even yet reached the end of our second year, although we do next week, so we're nearly 2 years old. But the results have been quite significant already. So I'm going to cover four things. One, the problem, the flooding situation in the UK. Second, our response to that, the formation of flood re. The results in quantified terms, what difference has it actually made to people living at risk of flooding in the UK? And importantly, where do we go next? So taking flooding first of all, this was the UK problem that we were responding to. The figures there show the scale of the flooding events at an insured loss level that we saw in the UK, with the most dramatic in recent memory being in 2007, where we saw the £3 billion loss. But importantly, then every 1 to 3 years seeing a significant effect that was having an impact across the country, but was having specific impact, and part of the solution for flood re was the impact that it was having on householders, so residential homes. So flood re was created. Flood re is a joint initiative between the UK insurance industry and the state, and it is designed to do what it says on the screen. So it's about promoting both the availability and the affordability of flood insurance for those that live at risk of flooding. It's just a residential scheme, but it also has a second important purpose that I'll talk about as well, which is it is designed as a temporary solution. So it's got a finite life. Flood re will come to an end in 2039, during which time we're expected to create an environment, to create this transition to a market where prices reflect the risk of flooding. And I'll talk about that in a bit more detail towards the end. But what is flood re? Clearly it's a solution to a long-standing problem. It is a reinsurance pool solution. So every primary insurer in the UK that writes household business makes a contribution, effectively a tax, it's collected under law, to flood re in proportion to their market share. And we use that as our primary source of income. We are a regulated reinsurer, and somewhat uniquely, we are owned by the insurance industry, but are accountable, and I'm accountable personally to the UK Parliament for managing that public money that has been collected and ensuring we're meeting the second part of our purpose of transitioning towards prices that reflect risk. And as I say, we have to do that within 25 years. Importantly, what it's not, and this goes to some of the earlier discussions about mandatory versus voluntary schemes, is it doesn't change the customer experience at all. So if you buy home insurance, and home insurance within the UK contains flood cover, you buy it in the normal way, then the insurer is making a reinsurance solution on an individual risk basis of whether then to pass the flood element alone to flood re. In the event of a claim, the homeowner or the householder makes the claim in the normal way, is paid by the insurer, and they then claim from us if the flood element has been reinsured. But it's not an underwritten product on an individual basis. The premium is set by reference to the council tax band. And in the UK, the council tax is a proxy for home value. It determines how much local tax that you pay. And therefore, that is a premium that is below the risk reflective price, and the difference being funded by that subsidy that we collect from all the insurers. So importantly, the customer experience isn't changed. And the second thing it's not doing is we are not paying for property level resilience, so the investment in individual homes of measures that will make the home more resilient, more resistant to flooding in the future. So what have we achieved? So going back to the end of our first year, or in fact the the results go to the halfway point during our second year, we have 142,000 policies that have been passed to us. So there's an active choice being made on behalf of 142,000 homes to pass the flood element to us. The 93% is probably the most important figure on the slide. Before Flood Re was created, before we were launched in April 2016, if you had previously had a flood claim, only 9% of people could get 2 or more quotes. Now 100% of people can get 2 or more quotes, and 93% of people can get 5 or more quotes. So we have literally, within that first year, and now we're 2 years in, created a competitive market that is working, and therefore consumers are benefiting from more availability. In terms of affordability, the 80% there have seen a saving of their home insurance if they've previously had a flood claim of 50% or more. So it's suddenly made home insurance that potentially was completely unaffordable if you previously had flood claims to being affordable. And we've also created a standardised excess, a standardised deductible of £250 sterling, whereas previously it was quite common to have many thousands of pounds of excess, in some cases in excess of £10,000, which is clearly unaffordable at a household level. 90% of the UK market is available, offering products that are backed by Flood Re. And last year, we're a not-for-profit, but we made £130 million profit, and our solvency level was of the order of 230%. Now, in part, and somewhat ironically, that's because the first year of our operation was the driest year since 1975, which, from an external perception point of view, caused us some challenges. From an insurance balance sheet point of view, given we were starting from £0, that actually was an excellent set of conditions that meant we were able to build our level of reserves. We're now coming to the end, and flood period clearly is concentrated in the winter, although not uniquely. Coming to the end of our second winter, which has also been exceptionally dry. So we have paid very, very few claims. So when I redo this slide and we produce our statutory results, which we'll release in June, those numbers will increase further. But, I mean, we laugh about it, but that's what we're there to be able to do, to have a strong capital position to be able to pay claims. It's not an if scenario, it's absolutely a when. We've had a statistical strangeness that has meant we've had 2 very, very dry years. Nicoletta spoke about the public direct communication in her business. We don't have quite the same mandate because we sit behind the insurer, but we are interested in making sure that home owners and householders know that there is now a solution that makes it more affordable. This is a campaign that we ran last year called Local Heroes, recognising people in local communities that had done some really great things to make flood prevention or flood awareness or flood response better. And we awarded a prize that our members had sponsored to a lady called Geraldine that had been working on flood prevention for in excess of 20 years, done some phenomenal things down in the south of the UK. And the purpose for us was to raise awareness that actually there is now a solution to make it more affordable. So where do we go next? So that second part of our core purpose, to manage over our lifetime the transition to prices that reflect risk. We've achieved lower prices already in the market through competitive pressure, and we've achieved lower excesses. We will continue to track those without being complacent to make sure that those remain. We work with the agencies in the UK that invest in flood defence, so that's the Environment Agency, and using the skills and experience that we have built and continue to build, so that large infrastructure projects are actually targeted to benefit the maximum number of homes. We continue to collect evidence on how costs can be reduced, so sharing best practice across the insurance industry for drying schemes, for example, or resilient plaster or loss adjusting techniques. And And we're also working with a university to build the numerical support for which resilient measures actually make the biggest difference to the cost of claims, so that we can move this debate around whether you should invest from a philosophical debate to an actual numbers-based debate. So we can actually start to underwrite on the level of resilient measures that have been put in to a home. So if you've got resilient plaster, if you've got plug sockets a metre high, if you've got water-resistant kitchens, then we're building the evidence base that will demonstrate how much faster it is to repair, how much cheaper it is to repair, and clearly the dominant cost in those sorts of claims is alternative accommodation. So being able to get the family back in sooner, which from a social perspective is the primary objective. That's the most disruptive, that's the most traumatic element of a flood experience. So that's what we'll be doing between now and 2039.